Okay, welcome everyone. Hope everybody's traveling well wherever you are around the States, the country, or the world. So we'll probably give it a start. My name is Nicholas Lyons. I'm the leader dairy for New South Wales DPI, and I'll be your chair for this meeting today. So this is the second New South Wales Dairy Breakfast. This is an initiative that we started within the department a couple of months ago. And the idea is just to engage with the broader dairy industry and community to try to share a bit of the insights and the knowledge that are floating around relevant topics for that time of the year. So we usually run for around an hour, and we've got a couple of guest speakers. So we will be repeating that format today. The session is being recorded for those that have to jump off early or that couldn't attend. I will please ask all of you to be muted so we can eliminate any background noise. But I encourage you to turn your camera on so we see who's in this virtual room. We'll have 3 presentations today. We'll tackle a couple of minutes of questions after each of those presentations. And then we'll have a couple of minutes towards the end if there is further questions too. So as we go with the presentations, feel free to type in your questions or comments in the chat box. So as I said, we'll run for around an hour. We've got 3 speakers today. And before I introduce the first speaker, I'll just launch a poll that we've prepared to kind of get a bit of a better understanding of where we all stand. So you should see that popping up on your screen now. Excellent. I see some votes coming in, which is exciting. Don't lie. We won't be able to pick up if you're lying, but we encourage all of you to share your real thoughts on that. Give it a couple of more seconds. It's exciting. We've got 24 people on the line at the moment, which is really excellent. I can see some people from the north, from the south, even interstate, which is good. Perfect. So share the results with you so you can have a look at what you're all feeling. Most of us are confident or not sure sorry, about the season ahead. Nobody's not confident, which is good and exciting. And roughly a 60-40 split between haven't read and have read the Situation and Outlook report. So good that we have John here joining us today, which is good. So without further ado, I will introduce our first speaker. The first speaker for this morning's breakfast is Zita Ritchie. Zita Ritchie is a development officer dairy with the New South Wales DPI based up in Wollongbar, and she'll be sharing some insights into the seasonal climate outlook for this spring. So Zita, the stage is yours.
Thanks a lot, Nico. Just why can't I go across on my slide now? There we go. So thanks very much for the introduction, Nico. For those that don't know me, I'm Zita Ritchie. I'm a dairy development officer based at Wollongbar. So I'm not a climate specialist, but I have done some work in this area in the past. So this morning, I'm just giving you a little bit of a brief seasonal snapshot, some of the recent weather and climate we've experienced and a little bit of the outlook. And if I can't answer any questions, I'll be sure to follow that up and with you at the end of the session at a later date if I can't answer them. Okay, so what's the rainfall been like for our dairy areas over the last 3 to 6 months? So I guess the 2 charts I'm showing here is decile maps. So on the left, we've got the winter rainfall decile map. So really a decile's just showing a period in time of how the rainfall kind of performs compared to the longer term average. So for our winter rainfall from June to August, you can see a lot of the east coast of New South Wales has been between average to slightly drier, particularly in the north and mid-north coast there. Whereas, you know, towards inland central New South Wales, it's been a lot wetter than average. And, you know, I guess that's probably been a bit of welcome relief on the east coast to average to slightly dry with the wetter conditions that we experienced a little bit earlier in the year. So the chart on the right there is our annual rainfall to date. So from January to August, so the last 8 months, and you can see, you know, as we're all aware, is that it's been quite above average to well above average for most of the state, particularly around the Hunter, you know, and largely attributed to the really heavy rainfall we received in March. So the next chart also, when I'm looking back to what the season's been like, for those that don't know what this chart is, it's the NDVI map. So it's looking at the level of plant greenness compared to normal for different periods of time. So this is from June to August. And, you know, I guess looking at it, the levels that are greener than average on the map is a lot of the state, but you can still see patches of drier than average conditions or drop plant brownness, I guess you can see. Some of the areas of the western kind of Murray area, and then also there's, you know, in the southeast there and parts of the north coast that were affected by the, you know, the 1920 bushfires are also evident, and some of the parts of the central tablelands are still a bit more brown, plant brownness than average for this time of the year from June to August. So although there is a lot of greenness across the state for winter, there's still areas that's still a bit drier than average. So that's kind of what we've seen in the last few months. I guess looking ahead, at this time of the year, a lot of the Bureau, particularly in Australia and other kind of climate organisations and models, are really looking to our two key climate drivers that really influences our climate in Australia, and that's ENSO, the El Nino Southern Oscillation, which is what we're looking at in the Pacific Ocean, and then the IOD, which is the Indian Ocean Dipole. And the IOD is more of a driver in southern New South Wales and also some parts of the East Coast. But particularly, we're looking at the changes that we're experiencing in the Pacific Ocean at this time of the year. So we're looking at sea surface temperatures, sub-sea surface temperatures, what the trade winds are doing, and cloud activity as well. So look, they're not the only two climate drivers for us in New South Wales. Like there's other kind of weather phenomena and drivers that also influence our rainfall, such as East Coast lows, but they're hard to predict. And then we've also got the Madden-Julian Oscillation, which is a kind of a cloud band that sits around the equator that moves on 30 to 60 day kind of period. But at the moment, that's not really in a phase that kind of is affecting our rainfall. But what's interesting now is that we're looking at the Pacific Ocean at ENSO, and it's looking like there's a chance that a La Nina might still form in the coming months and off the back of a La Nina last year. So we're looking for a re-emergence of that essentially. And there's a few indicators in the Pacific Ocean, which I'll show in the next slide, that is looking like it could go that way, but there's still some things that aren't some factors are still quite neutral as well. So this is a sea surface temperature anomaly map that is produced by kind of a climate organisation in the States. And really this is just showing patterns in the ocean that are warmer or cooler than normal, than average. So areas on the map here that you can see that are in the bluer areas, so that's our cooler than average kind of sea surface temperatures in the Central Pacific. We can see this kind of cooling in the Central Pacific where that big purple rectangular box is. And when we get this cooling in the Pacific Ocean, it's typically when we get this cooling in the Central Pacific, we get slightly warmer temperatures off the Coral Sea, off the northeast coast of Australia. And this is kind of what the indicators that we look for when we're heading towards a La Nina. So we see this kind of saw-like pattern in the Central Pacific, which is quite often what we see when we're heading into a La Nina. It doesn't always happen, but when we do get a La Nina, we do see this occurring. So when we look at this, I guess what's important for Australia here is typically when we get a La Nina, we get this warmer than average sea surface temperatures off the northeast coast of Australia. And when we get warmer than average sea surface temperatures, just think warmer water, there's more moisture there, activity can form more cloud activity, which feeds down as moisture into Australia, which can be really quite influential for our rainfall in New South Wales, particularly as we get into later spring and summer, particularly in the northern parts of the state. So at the moment, although ENSO is technically classified as hasn't quite reached the La Nina thresholds yet, we are seeing that sea surface temperatures cooling at depth. However, at the surface, it quite hasn't reached the threshold yet. So that's why it's a La Nina watch. So there's signaling there in the Pacific Ocean that it might head towards La Nina, but we haven't quite reached there yet. And then similarly, in the Indian Ocean, we're looking for similar kind of patterning. So you can see two little boxes there. There's one box that's off the coast of Indonesia, off Sumatra, and a little box off the east coast of Africa there. So at the moment, there's two phases of it's called the Indian Ocean dipole. It's positive or negative. The last few months we've had a weak positive, we've had a weak negative Indian Ocean dipole. And when we get that situation, typically in winter spring, we get increased chance of rainfall for winter spring. However, in the last couple of weeks, this has weakened off. And this is really, when I say weakened off, it means that the temperature differential between Eastern Africa and off the coast of Sumatra, there isn't as much of a difference there. And so that's important because when it's a classic Indian Ocean dipole negative, IOD negative, we get that warming off the coast of Sumatra in that little box there. You can see warmer than average temperatures off the coast of Sumatra. And when we get that really classic warming off the coast of Sumatra and the cooling off Africa, we get this differential, which we get warmer than average sea to surface temperatures, more moisture, and that can feed down as cloud band activity into southern Australia. So it can influence rainfall more so. I think it's got a stronger effect in the southern parts of New South Wales. So that can be a really big influencer for spring, particularly in parts of Victoria as well. But yeah, it can influence for southern New South Wales, sorry. So at the moment, it's weakened off. There hasn't been a really strong signal there from the IOD, but the thing to watch really is what happens with ENSO in the coming months. So based on these kind of factors of what's happening in oceans, pressure, trade winds, that kind of thing, the Bureau's put out a 3-month outlook from October to December. And look, they're saying that there's a pretty high chance of exceeding median rainfall for the coming months, which is positive for spring conditions in New South Wales. So look, I guess that's some of the forecasting that the Bureau's put out at the moment. In terms of temperature, these are two maps here. The one on the right is really just saying that we've got a pretty good chance of exceeding the minimum temperatures from September to November for New South Wales, whereas on the one on the left is the chance of exceeding maximum temperatures. So what's interesting is that the southeast coast there seems to be a greater chance of getting higher maximum temperatures there, but the rest of the state's kind of more average or slightly cooler maximum temperatures. So in summary, I know that was a short little update of some of the historical rainfall that we've received and what we're kind of looking at with some of the climate indicators at the moment. But look, there's a chance of a La Nina forming in the coming months, and that is often associated with above average rainfall for late spring and summer, particularly in the northern parts of New South Wales. The Bureau's 3-month rainfall outlook is showing that there's a greater chance of wetter conditions for October to December, and warmer minimum temperatures are expected for spring. So I guess that's really looking to see what happens with La Nina off the back of the one that we had last year, to see if that will reform and show some stronger signals in the coming months. So for more information, I drew some of this information from our climate branch in the New South Wales DPI, and they produce monthly updates on rainfall, temperature, drought indicators. So you're welcome to go and check out that website if you're so inclined. And then also just to signpost you to some of our resources too that the dairy team put out. So we've got a Facebook page and we've got our quarterly newsletter, which has just come out last week, and also on our dairy webpage. So for other information that our team's doing, and feel free to reach out to me separately after this presentation if there's any other climate or seasonal information you'd like me to send to you. But that's all from me. Thanks, Nico. It's a bit of a short update. Thank you.
Excellent, Zita. Thank you for that excellent presentation on what the season and the climate can look like moving forward towards spring and summer. We've had one question come through, but I also encourage you, if you have any question or comment, you can type it, or you can also raise your hand and we can tackle the question and the comment as we go. The question that has come through from Shane is, hi Zita, what is the confidence level for the forecasts from the models at this time of the year?
Yeah, that's a really good question, and I can't say exactly what the confidence is. And look, typically what happens is a lot of the modelling, there's a lot of different, it's not just the Bureau that put out their models. There's a ex-colleague of mine in Victoria that actually surveys 12 international climate models, and I spoke to him before I prepared this presentation, and he said that 5 of the 12 are predicting wetter conditions for spring. Slightly wetter conditions for spring summer. So look, they don't always agree, and but the confidence level really increases at this time of the year. So as we head into late winter, spring, the confidence level of those climate models is a lot more, I guess, accurate than say when they're trying to predict back in autumn, because they're really waiting to see, because the oceans are in that transition phase in autumn, the confidence and level really increases as we head into this time of year. But it's very true, like sometimes they can have a forecast and it's not always 100, it doesn't always line up with what happens, but it's kind of using the best information we have at the time, and it's around kind of risk. But yeah, I'm not actually sure. I'd have to look for that map that I showed you from the Bureau. They would have a confidence level, I think, around what that map would be. So I guess that's why they talk in, percentage chance of increasing, above median rainfall. It's never 100% accurate, but yeah, I hope that answers a bit of your question.
Perfect. I don't know if there's any other question or comment that anybody would like to make on Zita's presentation. I'll go on, Zita. What does this actually what are your thoughts of what does this mean for pasture production, maize silage moving forward, or even animal welfare from a heat stress perspective? Any comment there?
Yeah, that's a good question, Nico. I guess again it comes back to risk, but and if knowing that a La Nina, if and this is always an if things start trending towards it's going to be a La Nina, and we know it's associated with increased rainfall in spring, summer, I mean it could be really positive. It's all around timing, isn't it, over those months and in what intensity we receive that rainfall. But it could potentially be really positive for summer pasture growth, particularly in the northern part of the state where I am. But yeah, as we saw last year, we saw some heavy rainfall on the back of that La Nina as well, and during summer. So there's always a risk there that I guess it's just potentially could be managing wetter conditions in end of spring, summer too. But I guess it's just trying to make sure that you can be prepared for that scenario of wetter conditions as well.
Yeah, and I think that's good, the comment that you made, that there is a risk. Maybe the confidence is obviously not 100%, but it gives you an outlook of what could it look like, so you can be better prepared. Yeah. Tony, I can see you've got your hand raised, so I guess.
Thanks, Nico. I have. Can you hear me okay?
Absolutely fine.
I'll put you on the spot, Zita.
Oh, here we go.
If you were a dairy farmer at Lismore at the moment, looking at your rainfall predictions for the next 6 to 8 months, would you be buying hay to fill in your autumn feed gap and locking it in now, or would you wait and float the market based on improved conditions and potentially getting a bit more feed out of the paddock?
Oh, Tony, I don't know. You really have put me on the spot. I'd love to flip that around and say, what do you think? But I won't do that. Oh, look, I don't know. And obviously, Tony, it depends on each farm and how they're affected over the last 12 months. Like a lot of the farmers up this way around Lismore Casino, they weren't able to cut as much feed either with the wet conditions earlier in the year and off the back of having to buy in a lot more feed previously. So I guess it depends on what prices are around at the moment, if they think that's a good risk management strategy of locking in feed earlier. I don't know. I mean, people have seemed to be fairly confident and happy with the way the season's progressing at the moment going into spring. So it depends what their kind of balance is on the farm with what levels of pasture, what percentage of pasture and annuals they've put in and buying feed like that. So look, I'm sorry, that's not a yes, they should do this, but I don't know. If anyone in the room has probably got just as more experience than me, it's happy to take some other comments on that. It's a good question though, Tony.
Sorry, I didn't mean to put you on the spot.
No, it's all right. And it really depends on that confidence level and if the climate models are right too. So, I mean, it's not just looking at El Nino, La Nina cycle. It's so many other factors as well that can also influence how it pans out.
Yep.
Thank you, Tony. We always love you. No, but I think that's a really good question. And in a certain way, it's a good segue to John Droppert's presentation, given he's going to talk about markets and insights. So with that, I would like to thank Zita first for your presentation, and then I'll move to John Droppert. John is an industry insights and analysis manager with Dairy Australia, based in West Gippsland in Victoria, and he'll be talking about the latest situation and outlook report and a bit into what international and domestic markets look like. So John, I'll go to you. You're muted, John.
Yep, rookie mistake. I was so busy worrying about the sharing, I forgot about the mute. Hopefully that's all coming up well and good now. And thanks everyone for coming along. Thanks for having me along. And it's a dubious pleasure to be coming to you from Victoria, where I think we've just stolen your crown again as the craziest place to be in COVID-ridden Australia. So apologies if I start sounding a bit weird. It's all a bit strange down here at the moment. I'm going to start off very quickly by giving you a bit of background behind this report. I recognise a lot of the people on the call, and I know a lot of you are very familiar with this. And at least 40% of you have either read the report, the latest report, or been polite enough to lie about it. So, but for the rest of you, yeah, this presentation is based on Dairy Australia's flagship Situation Outlook report, which you know, it's a big report, but it really brings together a lot of the other work we do behind the scenes around collecting industry data, forecasting milk production, which we do for both internal and external purposes, our commodity price reporting, and our analysis around inputs. So this is where we kind of provide the entree to all of that data that's happening and being published in other places, and kind of try and pull it together into some sort of narrative. And of course that narrative is influenced by DA's position, I guess, as a provider of services to the industry rather than being commercially motivated. And I'm not going to talk too much about Mother Nature to start with, because Zita's already given you a much better and more localised wrap of that. But the point of this slide really is just to make that point that that on-farm things are looking a lot better this season, and that's probably one of the key thrusts of this presentation. The overall message that I want you to come away with is that things are looking much better on farm, and you'll be seeing that locally, but that's the case in most regions around the country. What that doesn't mean is that we're expecting huge growth in milk production. I'll talk to that in just a second. Out in the market, things are looking pretty good as well, but much more shaky, I would say, than the Australian sort of farm context. So the takeaway, I guess, that when we get to the end of this, that I would want for yourselves and for farmers that aren't listening is to certainly, I think the confidence that we've seen, and in the survey numbers, but in our national dairy farmer reporting as well, is well placed. But I would certainly want people to be cautious about the medium term and the longer term. And one of the traps we see in times like this, and particularly when land values are getting away and cow prices as well, is that people do take risks expecting the status quo to persist forever. I would argue that we're probably in a much better than average situation at the moment, and I'd be very cautious about making long-term decisions that assume that will never change. Some investments are good investments anyway, but certainly be mindful of the uncertainty out there. So that being said, back to the weather, it's been nice. We've seen purchase feed costs come down. They probably haven't come down, and I've just picked the North Coast as an example of this, but they probably haven't come down as much as people would have liked, for sure. And again, that's common, I think, through the country. But we have seen definitely some relief from those drought levels, and I think the outlook for harvest is very positive as well. And so at the moment, I think there's still more to come in terms of positive developments there, but definitely a helping hand. I mentioned before that I don't see much upside in milk production. Ordinarily, in a year like this, I think you could easily see the country grow 4%. We sort of saw that in 2011-12, for example. There's been other years in a similar set of circumstances across many of the major regions. We do see growth this season, because of the confidence that we're seeing, because of the margins that are out there. But I think the environment we're working in terms of beef prices, for example, that's leading to competition for land, but it's also leading to competition, I think, within a lot of farm businesses. Keeping those bobby calves or even breeding beef calves. We're seeing more and more of that, and of course that that's taking resources away from growing the dairy side of the business. We've also some really serious labour challenges around the country, and that's not new, but it's been much worse, I think, since the start of the pandemic and the borders closing, and that's obviously holding things back as well. And there's a lot of family farmers that aren't going to run themselves into the ground doing everything if they can get by taking a more conservative posture. And again, beef cows don't take as much work sometimes, and at the moment there's good money to be made there. So I think all of those things together are seeing fairly modest plans. The National Dairy Farmer Survey suggests 95% of farmers are investing in their businesses this year. So a lot of people are making investments, but by and large, we see those as being, a lot of catch-up repairs and maintenance, incremental improvements, labour-saving improvements, not so much, building a bigger dairy or buying the place next door. Of course, those things do happen, but we seem to see the balance being much more around that incremental and labour-saving and catch-up maintenance. There is a significant cohort of farmers that are in expansion mode. I think 23% in New South Wales from memory, but there's also quite a few that are still in production terms in a steady state. And we've come through some very challenging years, so I think it's only reasonable that people are going to be looking to continue buffering where they are at the moment before they take too many risks, if indeed they do decide to do that. So 0 to 2% is our growth range at the moment. You'll note that for most parts of the country, the July numbers were fairly negative. I think New South Wales was actually up 2% or 1.8, I think. It's fairly early days. We saw nationally a very strong July last season, so not too stressed about that. But we'll reevaluate that forecast, I think, in time for our December report. Looking to the domestic market, where we see so much of our product going these days, and particularly the retail side of it. It's been on a real roller coaster through 2020. Of course, panic buying, as things really got interesting, and then since then we've really kind of been easing back out of that panic buying phase, where obviously people were getting whatever they could, and you can see that in the white milk chart on the left there. When there's no home brand milk, you're going to go and pay more for the for the company branded stuff, if no matter what your usual preference is. So that's that impact of shelves being cleared. But one of the things we've seen, I guess, throughout the course of COVID-19 is that people have become more aware of product. We've seen and where it comes from and provenance, and those things were sort of obviously talked about before COVID-19, but we're hearing we're seeing more and more data points that suggest that consumers are being that little bit more conscious about where their product comes from, and even in this sort of situation where there's a lot of consumers worried about the future, worried about their household finances, not having jobs, for example. We still do see increased buying, and not so much, you can see that white milk shares kind of bled back most of the way back to that long-term private label branded kind of balance. But if you look at the other categories on the right-hand side there, and that's all liquid milk, and then cheese, spreads, and yogurts. The volume drop's been faster than the value drop, so suggesting that there's price increases being locked in there, which of course is happening. Farm gate prices are higher, and in a lot of cases the retailers are accepting increases on the shelf to account for that. But also we've seen some trading up. People are buying more branded product again, and that's actually offsetting some of the changes we saw earlier in the pandemic. One of the classic examples was people didn't buy pre-sliced cheese anymore, because if you're stuck in lockdown for 230 days, you need something to do, and cutting cheese is as good as anything. So there's no point paying twice the price to get a pre-sliced block of cheese, right? So you've even got time to wash the knives up afterwards. So some categories have copped it, but other ones, so example, your dairy desserts, part of the yogurt category. I mean, every time I go to the supermarket now, I know I deserve a treat, not just the kids, because homeschooling only so much fun. So, and you know, there's treats to bribe the kids as well. So, you know, higher unit price products being purchased there. So it swings and roundabouts, but what we have seen as this has kind of come out in the wash is that there has been more value retained in the dairy cabinet, which is really good. We probably pushing my time limit a little bit, so I won't spend too long on this, but we do talk about it in the report as well. You know, plant-based beverages, we hear so much about them. You know, they make a lot of noise, they're taking over the world. You know, you can see from the chart on the left there, they are growing strongly, but they are still a fairly small part of the market volume-wise, and probably more interestingly, well, I'll get to the more interesting part later. Hold that thought. I should have put these slides in different order. The reasons people buy them are kind of interesting too. I mean, they think it's healthier for you, which should be a fairly easy one to shoot down. They prefer the taste, so obviously they haven't tasted anything good for a while, and they believe it's better for the environment as well. So there's sort of fairly fuzzy reasons why people buy them, but a lot of those I think are fairly contestable from a dairy point of view. So there's been some really interesting research that we've been doing on that, and I think that'll start to inform more and more of the you know, the messaging going forward. But I personally don't find it too threatening from that point of view. You know, dairy obviously remains you know, the significant volume, but the interesting point I was wanting to make earlier is that the majority of households buy both. There's not too many hardcore vegans out there that will not put a bottle of real milk in their trolley because they think they're going to catch COVID from it or something. There's the majority of people, it's, you know, it's the recalcitrant child or the, you know, the partner that you put up with that insists on this stuff, and okay, you buy a bottle while you're out shopping to keep them happy or to try it out. I mean, a lot of people want to experiment with these things as well. But yeah, the vast majority of people actually will buy both. So there's definitely some crossover there, and there's certainly not a huge cohort of consumers that have been lost to real dairy forever. So again, I think that's encouraging. I want to spend a little bit of time on global markets, and quite often with these sorts of presentations, particularly in the northern states, I often get told, you know, we don't want to hear about global markets. We are overwhelmingly domestic focused, and that's absolutely true. So I do I quickly touch on the relevance of those as well, and I think this slide is oldie but a goodie in terms of summing it up. And you know, it becomes more true every year. I think we're a very interconnected milk pool these days across the country, and certainly more and more connected internationally. And so, whilst you know, whilst a lot of the local milk goes into domestic markets, it's actually competing with imports and competing with milk from export exposed markets down south. And you know, for example, I think I was looking at these numbers the other day. I think 37% of Australia's dairy imports come through Sydney. So, you know, huge exposure right there, even before you consider some of the, you know, some of the line haul facilities that have been built in northern Victoria, and you know, the sort of investment in getting milk, not even just up the coast anymore. You know, those little arrows sort of suggest it's incremental, which it has been for a long time. But you know, sending milk straight to Brisbane now, for, you know, there's heaps of that going on. So. I think that exposure is actually getting bigger over time, even though the country's share of milk exported is actually shrinking. And probably, yeah, again, the two key reasons. There's a lot of milk moving north because Queensland and New South Wales are both milk deficit states overall. No news there, and imports have grown significantly. Put off on those in my rush just before. So what's happening in global dairy markets? We're seeing milk production is growing, you know, fairly slow and steady overall. I think that last kind of, you know, that volatility in the black line there probably overstates it a little bit, but we're seeing milk production between, you know, 1% and 3% growth year on year, 1% and 2% for most of the last period. So we're seeing fairly incremental growth in global milk supply, which is usually not the case. And it's, you know, when you think global demand on average grows by about 2% a year, you can see why the market's been fairly balanced. So supply's been growing at about the rate demand typically does, and things have been fairly balanced even through the period where we've seen COVID, and you can see that sort of drop there in early 2020 of the black line, where we saw a lot of supply management efforts through the Northern Hemisphere when they hit their peak just as COVID was smashing up food service markets. So the market has been fairly balanced and demand has been sufficient to soak up supply. But the point of the chart on the right there is that a big part of that demand soaking up supply has been China. And, you know, I don't need to tell you what some of the risks might be there, but obviously, you know, we do have we do have big exposure to China, and the global dairy market has a big exposure to China at the moment. Again, I won't spend too much time on the commodity price story. It basically reflects, you know, what I've been saying. We've seen a period of relative stability in markets. Over the winter, over the last few months, we saw that, you know, we saw prices start to ease. There's typically a, you know, quiet period through the changeover between the northern and southern hemisphere seasons, but now we found some stability again. So in the short term, we're fairly happy with where markets are at. It's probably some of those, you know, medium-term challenges around volatility. So, you know, I mentioned one of them just before in regards to China and sort of the geopolitics there. But this chart sort of hints at another one. And you know, maybe a couple of weeks ago, this might have been news to you more than it is now, because I think everyone's heard about the freight challenges that are out there at the moment. You know, this is one number obviously showing that, you know, the average container or the container index globally, you know, cost of shipping containers around has doubled. It sort of understates it a little bit. I think, you know, the volatility we're hearing from exporters is, you know, it's just crazy by their standards of, you know, a very globally predictable market where ships come and go and containers go on and off, and you know, it just sort of moves like clockwork. I think at the moment, the combination of testing in some ports, particularly Chinese ones for COVID, you know, they test the outside of the packages and they hold products while they're doing all these tests, and you know, that has knock-on impacts. You know, labour force availability everywhere from California to Shanghai and, you know, all over the world, you know, getting people on the port to unload products, you know, getting crews and changeover crews on ships to, you know, to move the product. All these things are sort of adding up to some real disruption in global supply chains. And that obviously has an impact for dairy exports. It's going to have an impact for, you know, the imports of a lot of your inputs as well. So, you know, bale twine, silage, wrap, you know, hopefully not fuel and fertilizer, but, you know, fertilizer prices are certainly already increasing on the back of this stuff. So even without people sort of wedging container ships across the Suez Canal, we're seeing some real, you know, underlying logistical challenges as well. It probably add a flavour of unpredictability to the market, and that's not what the market likes to see. You know, in general, volatility is not good for business. So I think that's sort of worth keeping in mind. And this looks like being a, you know, a multi-year story. I don't think anyone's expecting this to go away anytime soon. So my key points that I sort of started with, that I'll, you know, expand on a little bit more. You know, we do see conditions on farm being pretty favourable at the moment. I hope that's not too controversial. There's certainly pockets of pain, you know, as we see at all times in Australia, and I know there's, you know, there's farms in New South Wales still dealing with sort of low-level ongoing issues from floods and even bushfires. I think too, you know, these things don't disappear overnight, but the overall picture is fairly steady and margins are pretty good. What we don't see is that resulting in a flood of milk. I think some production growth is likely, and that would certainly be good, you know, from a standpoint of positioning for the industry, but we like to think we're reasonably conservative in terms of our expectations there. In the supermarket, you know, again, demand for dairy is very strong. Food service has been knocked around, but the market has managed to balance it remarkably well. And of course, people keep buying dairy, even though there's other alternatives out there. And that risk picture, I think, out there in global markets as much as anything else, but we see the knock-on back to our context here in Australia, even where we are domestically focused. You know, risks from market balance, risks from politics, and risks from logistics. But you know, that's probably worth keeping in the back of the mind. I don't think you need to run around and scream and panic about it, but certainly something to be aware of, particularly where people are looking at making long-term decisions that, you know, that might assume nothing's going to change going forward. That's all I've got. You can of course get the reports off our website, or I'm happy to be contacted if you have any follow-up after this. Otherwise, happy to talk about any questions or anything else that's on anyone's mind.
Thank you very much, John, for that very insightful presentation. As we did before, I encourage you, if you've got any questions or comments or anything, you can type them in the chat box, or you can raise your hand and unmute yourself. In the meantime, there's been 2 questions come through. One by Shane that I think you tackled already, that is, has shipping delays affected imports? Which I think you've covered already. I don't know if you want to expand on anything there.
Yeah, I think they have. Certainly, bringing containers in is not much less challenging than sending them out. I think probably the biggest challenge for importers really has been the container availability for the exporters in the countries that are sending it to us. So the US, for example, getting containers out of California is really challenging. For most of our product coming from New Zealand, most of our dairy product, probably less so. So I think it's probably, there is probably asymmetry there. I think, our imports are probably more disrupted, I think, than the dairy imports that we're competing with, if that's kind of the gist of the question. I think, New Zealand and Australia, that connectivity is much stronger, and, especially when it's within, a company like Fonterra, for example, that can manage transactions between itself and itself with a lot less uncertainty, even in this situation.
Perfect. Then there's 2 other questions that can be probably tied together. That is there any evidence of those buying non-dairy substitutes moving exclusively to plant-based, or are they buying a mix? And a similar question that could be linked to that is the percentage of non-dairy products growing or stable?
Yeah, so it is growing, and you can sort of see that 10% increase versus the much lower increases for other liquid milks, for example. But I think what we see within that overall increase is there's a lot of churn between different non-dairy products. So people, buying almond milk, for example, because soy tastes like crap, and then oat milk comes out, and that's the new big thing. And a lot of these products do cannibalize each other. So I'm certainly not saying we shouldn't worry about them as an industry, but I think we shouldn't panic about them, because they're fighting with each other as much as anything else. I think my Zoom might have just conked out, but hopefully you can still hear me.
Oh, we've lost your audio just now.
I think I auto-muted when I came back. So apologies for that. We made it a long way before that happened. So yes, they are growing. There is a growing consumer base for those products, even off a low base. But again, it's not smooth sailing for those. And again, yeah. But linking back to Scott's question there, we do see more of them moving exclusively to plant-based, but very, very small, I think, in the scheme of things. I think it's, again, 98% of households that buy both. So, unless the vegan child convinces everyone to go vegan, there's definitely openings in that household. And sorry, one more thing on that too. You see, a lot of people, so for example, will put almond milk in their coffee, so say almond latte. We'll go and eat cheese at other points of the day, because vegan cheese is disgusting. So that's where you see that crossover too. Is that there's not, there might be a whole bunch of different liquid milk options out there. There's not so many ice creams. There's not so many cheeses, and then they're not quite as comparable. I mean, I grew up eating margarine because my dairy farmer parents, for some reason, thought that was a good idea. But we still drank milk, and I turned out all right. So again, speaking to that crossover, I think that's much more normal than the crazy vegan.
Perfect. And we've got a last question by Tony that I don't know if it's going to be easier or more difficult to answer than the one he asked Zita. That is, what is his chances of getting his French camembert in the future?
Probably a lot higher than your chances of going to France and sitting there, I think, in the near future. Although again, in New South Wales, you might be better placed for that. I think you'll still get it. But I noticed there's some good Australian camembert on special this week at IGA, so I'll probably start there.
Excellent, John. Thank you for that presentation. And probably the other thing to mention is that aside from the situation and outlook, there's a podcast by Dairy Pod that covers some of these topics of the latest report. So it might be relevant to some of you that are interested. And just tapping on Zita's presentation too, as part of the Business of Dairy podcast, the podcast we run in partnership with Hunter LLS. Not this current issue, but the previous one in August, Sheena Carter chatted to Josh Hack and Peter Bill about pasture production in the spring season. So you can go there for more seasonal conditions too. So with that, I thank you, John, for that presentation. And we flick now to Carly Potts. Carly is a Regional Extension Officer with Dairy New South Wales, based in Maitland. And she'll be talking about the Dairy Business for Future Climates project that is part of Dairy Up, the large R&D program led by the Dairy Research Foundation, and also about some funding for discussion groups. So thank you, Carly, for that. And I'll flick to you.
Thanks, Nico, and thanks everyone for the opportunity to talk about this project with you. Is that on full screen for you, Nico?
No. So I'm seeing your PowerPoint. Now, yes.
Beautiful. Thank you. Yeah, thanks for letting me have a chat about this program today. So Dairy Business for Future Climates is a project that's recently commenced on the Mid-North Coast. As you'll see on this page, there's a lot of organisations involved in the delivery and contribution to this project. It is part of the Dairy Up Research Development and Extension Initiative. Dairy Up is Dairy Unlocking Potential, and this project is number 7 in 10 key projects in this initiative. So its purpose is to identify key vulnerabilities and the changing risk profiles of current and emerging coastal production systems. The project will run over 18 months and undertake detailed analysis of one coastal dairy case study farm. It's using biophysical economic modelling developed in prior dairy future business climate projects. So some of these projects have taken place in Victoria and Tasmania already, but this one will focus on the Mid-North Coast region. So why are we preparing for future climates? This is actually the 2013-14 period where in 90 days, over 156 records were broken. And I know the Mid-North Coast region, as well as many others, is still being crippled by drought, recent drought, followed by bushfires and floods. So I think it's timely and for the Mid-North Coast region. So climate change projections for the Mid-North Coast here shows, so the modelling of this project, goes out to 2040, and this is the predictions for 2040 changes in temperatures and changes in the rainfall predictions over that time period. Sorry, I have to keep moving everyone's face so I can see. So we're focusing our case study farm around the Kempsey region, and this just shows that with predicting climates out to 2040, it's expected that Kempsey will have a climate similar to Lismore, Gold Coast, Brisbane region. So the project approach firstly does modelling on historical climate changes and then projecting it out to 2040. A regional working group will actually test some of the assumptions based around a case study farm. And then there's the biophysical and economic modelling, some social research, which is constantly fed back through a local regional working group on the Mid-North Coast to test some of those assumptions and give feedback around that as well. So similar to the projects that have occurred in this space in Victoria and Tasmania, a case study farm is used as a baseline for modelling. That case study farm needs to be reflective of the region. We understand the predicted impact of climate change and the extremes on the case study farm as it's currently operating, and then explore different options for that farm and model the predicted performance under the 2040 climate expectations. The result of the project will be 3 development options for the base study farm for each region, which will be, for the Mid-North Coast region. So a report will come out with how that farm would need to adapt if they were going to intensify their farming practices, if they were going to adapt their current or simplify their current farming practices. So we've recently commenced. Where we're at now is in June, expressions of interest went out for the local reference group. We've formed a group of 10 farms, over 5 farms, and 2 service providers are in that reference group. A case study farm has been identified and modelling work has now begun, which will soon be tested with the reference group and guided by them. You can follow the project for the Mid-North Coast region in Dairy Doings and Dairy Droppings, and those publications go to the Mid-North Coast and the Hunter region. If you follow Dairy New South Wales Facebook page in our annual report, and also for more information on this project and other projects in the Dairy Up program, then you can read about that on dairyup.com.au. I'll stop sharing there, but I do have a different, some information to share with you as well. So I just wanted to cover another opportunity with Dairy New South Wales is some discussion group funding. So we find that discussion groups are a great way to facilitate the adoption of best practice. Dairy New South Wales has some support for discussion groups, financial funding of up to $3,000. And in other regions, service providers have used the funds from Dairy New South Wales as well as farmer contributions to fund the discussion groups that they support. If you'd like to learn more about those discussion groups or that funding, or test some ideas around creating a new discussion group, then if you could contact your local regional extension officer, then we would happily talk to you about that. Just to give you some examples of discussion groups that are currently running, we've got some based around herd size and financial support and assistance, and others around regenerative farming practices. We've got a next generation farming group starting. So, but really would love to hear any ideas if you have any. So please reach out to your regional extension officer. Thank you, Nico.
Thank you very much, Carly, for that. I don't know if there's any questions or comments on that presentation. Probably I've got a question for you, Carly, regarding those options that you mentioned around like intensify, kind of adapt and simplify. Were those options that the farmer is going to come up with, or together with the reference group, or are those kind of predetermined and tested on that farm?
So the report will come out with those 3 options, with 3 options in that space, and the farm will and the reference group will have input into what that might look like and some modelling around that, because it will also factor in the current financial situation of that case study farm and what those changes would look like financially on the farm. Perfect. But they are the 3. Those 3 options are set, but what goes into those may change depending on the region and the reference group.
Perfect. Thank you very much for that. I don't know if there's any further question or comment about any of the presentations. We can cover any further questions that were hanging in there for Zita or for John, for Carly, or any other comments about the industry or anything you want to raise. Excellent. Look, if there's nothing else, I'll just share with you my screen at the moment. Just to wrap up, as Zita pointed out, we thank everyone for joining today, and we encourage you to follow the initiatives that the speakers have covered around the Situational Outlook report, the climate website, and the Dairy New South Wales website or Facebook page or Dairy Doings for more information. From our end, our key initiatives, as Zita highlighted, our dairy website. So we've just kind of revamped the dairy website within DPI. So it's got a fresh look and feel. So yeah, I encourage you to jump online and have a look at that. It's got the latest initiatives that we run. So keen to hear your thoughts. We've got a quarterly newsletter, as Zita said. The last one went out last week, but you can access it if you haven't subscribed yet. And as usual, our Facebook page. So yeah, with that, we probably wrap up a couple of minutes earlier for you to stand up, grab a cup, stretch your legs. We're all full of Zooms today. So I don't want to hold you unnecessarily for long, but I want to thank again our 3 speakers today, Zita, John, and Carly, for the time. And thanks all of you for joining. And we hope to see you again next time.